Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. Euro dollar. A bullish piercing line pattern and bullish opening white Mariposa yesterday, as a dip once again down towards the 106.66 to 106.68 zone, met the support there and bounced back up, with the high peaking at the capping combination of the bright red upper time currently at 107.24 of the late December 2023 to early March 2024 bearish shift pitchfork and the April 2020 low at 107.25. Further up, the moving averages are in less of a tight band as in recent days, but most of them are still in between 107.64 to 107.91. Overall, the market is still outside and below the mid-April to late June ascending expanding wedge pattern. This ascending wedge pattern is quite interesting, as it attempted to bring a transition pattern from a move up and out of the bright red bearish shift pitchfork, but ended up getting sucked into the main pattern instead. Now, the downside primary target for the break lower out of this wedge pattern, that's already been achieved, and it just leaves a much harder secondary target X below down at 106 even, which once the 106.68 to 106.68, 106.66 to 106.68 zone is overcome, may be quite easy to do. It all depends on breaking this quite decent support. Now, so far today, an initial small reactionary move back down, which has since recovered and started to move higher towards the bright red upper tine and the April 2020 low. I'd continue to keep a close eye on that hidden support in the 106.68 down to 106.66 zone. Cable, aka sterling against the US dollar. An immediate countering bullish harami yesterday after the previous session's bearish engulfing pattern. The main body of yesterday's action was encompassed by two significant moving averages: the slowly rising green highlighted short medium moving average currently at 126.28, which is below, and the flatlining mauve highlighted medium moving average currently 126.40, which is above. These two moving averages are part of a wide congestion zone between about 125.66 to 126.72, consisting of congestion at 126.72, the mauve highlighted flat medium moving average, the slowly rising green highlighted short medium moving average, the 50% Fibonacci line of the July to October 2023 move at 125.90, and the slowly rising long moving average currently 125.66. Overall, late 2 weeks ago, prices broke down and out from the dark blue highlighted April to early June ascending wedge pattern, thus giving a primary target X in the 125.65 zone, with a secondary harder to reach target X1 in the 121.80 zone. Now, so far today, still within yesterday's range, but right now starting to move above the mauve highlighted medium moving average. Euro sterling. A second bullish white soldier yesterday and a suitable follow-on to the previous session's counter-to-counter bullish harami and bullish double. The market was once again capped by the April 2021 low at 84.70, though it was tested and the close was just underneath it. Overall, the last 2 to 3 weeks have been a reactionary move back up from the market reaching its potential down at 84.30 from a May to June based bearish halfway hesitation. It is still open as to whether or not this action is also forming another bearish halfway hesitation, though I do see the potential for a rising wedge pattern, which I've drawn in instead. Now, so far today, a slightly higher open, but capped again by the April 2021 low at 84.70. Further up, we have congestion from late May and early June that formed the recent bearish halfway hesitation, and that's between roughly 85 even to 85.25. US dollar against the Japanese yen. An indecisive doji cross yesterday that is borderline with a possible dragonfly doji. This is coming after the previous session's bullish closing white mirror bozo. The recent move up broke new ground, with the market punching up through and closing over the April high at 160.04, as well as the April 1990 high at 160.34. We are now up into highs not seen since December 1986. There are a lot of gaps up here from back between April 1990 at 160.04 and the December 1986 high at 163.36. Below, we now have the congestion zone between 159.61 to 160.34, whilst above, we next have the dark blue middle time highlighted in around currently at 160.165, and that's of the recent March to May bullish shift picture. And above this is the purple highlighted middle time, currently 162.36, of the older February 22 to January 23 move. Now, so far today, a further move higher of new highs not seen since 1986, but it's been reluctant to do so, and right now it's looking like a shooting star pattern, a bearish type 1, but it's still early yet. US dollar against the CNH, the offshore Chinese yuan. A hanging man pattern yesterday, which was also a third bullish white soldier, and the highest close since November last year. The long suspected rise of this market is finally happening, though remarkably slowly. Below we have the previously mentioned congestion zone between 724 to 727, within which sits the rising short medium moving average, currently at 725.49, and a dark blue highlighted upper trendline extension of the January to April ascending triangle, currently at 724.16, and now also the rising medium moving average, currently 724.12. Looking topside, well, the next topside resistance of note is the mid-November 2023 high at 731.06, which ties in with some earlier congestion in the 731 even area. As a side note, I'm very tempted to look at the action since mid-March today as a possible reverse head and shoulder bottom type, but for now I am resisting that temptation, but I may give in. So overall, so far today, an expanding range such that today is set up to be a key reversal. If we close tonight either over 730.27 or under 729.95, then we'll be on. Anything in between will have a lesser outside day. Right now we're looking very much at a possible key reversal, daily key reversal down. US dollar against the Mexican peso. A third bullish white soldier yesterday and continued follow on higher to the recent bullish harami. Below we now have the steep dark blue highlighted middle time, currently at 1821.10, of the early April to mid-May bullish Andrews pitchfork. Meanwhile above we have the February 2020 low at 1851.71, which aided the capping action back in early June. It's time now to consider what the next pattern will be, and for this I would like to put once more the following idea in front of you. We have the possibility of looking at the action from 2022 to date as potentially a huge double bottom pattern idea. We are now, after the rise during May and now into June, even after some of the recent falls, relatively close to the neckline area in the big scheme of things of around the February 2020 low at 1851.71. As this is something I saw on my monthly charts, I would appreciate at the very least monthly closes, consecutive monthly closes over this level to confirm such a long-term pattern and potential move higher. Thus, with only today to go until the end of June, let's all keep an eye on where the prices close tonight. So far today, a spike higher over the February 2020 low, but the bearish pressure there, though not as intense as earlier in June, was still there and was enough to press prices back down, back below yesterday's close. But not as far as the dark blue middle time as yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.